Have you ever hesitated on a trade, frozen in front of your screen, or held on to a losing position hoping it would turn around? You're not alone. In fact, Mark Douglas, in his book The Disciplined Trader, explains that fear of losing is the silent enemy keeping most traders from reaching their full potential. In this video, we'll explore why losses hurt so much, how fear sabotages your decisions, and most importantly, how you can overcome it by building the right mindset and discipline. By the end of this video, you'll see losses differently, not as failures, but as stepping stones toward consistent trading success. So, make sure you stay till the end, because these insights could completely change how you trade, and maybe even how you think about yourself as a trader. Don't forget to like, share, and subscribe to the channel if you want more trading psychology lessons and strategies that actually work. Let's begin with the heart of Mark Douglas's message: fear. Douglas calls fear the silent enemy of traders because it operates quietly in the background, often without us realizing it. Yet it has the power to completely control how we think and act in the market. When most people enter trading, they imagine freedom, big profits, and the excitement of being their own boss. But once they sit in front of a live chart with real money on the line, something very different happens. Fear shows up. Fear of losing, fear of being wrong, fear of missing out, fear of giving back profits. These fears aren't small, passing emotions. They are powerful forces that shape decisions and distort judgment. Douglas explains that this fear is not rational. It doesn't come from the market itself, but from inside our own mind. The market is neutral. It doesn't know you. It doesn't care if you win or lose. But your mind interprets every tick as a potential threat to your well-being. And that's where fear begins to dominate. Here's how fear silently takes control. You see a perfect setup, one that matches your plan, but instead of acting, you hesitate. You wait for more confirmation. By the time you finally enter, the move is already over. Or worse, fear convinces you not to take the trade at all, and you sit there watching as the market takes off without you. Now frustration sets in, and you start chasing the next trade out of desperation. Douglas says fear also works in reverse. When you are in a trade and the market moves against you, fear makes it nearly impossible to cut the loss quickly. You freeze, hoping it will turn back in your favor. This is why so many traders violate their stops. They don't want to feel the emotional pain of being wrong, so they hold on, sometimes until a small loss turns into a devastating one. This is what makes fear so dangerous. It doesn't just make you uncomfortable. It tricks you into doing exactly the opposite of what you should be doing. Instead of following your rules, you start trading emotionally, reacting to every price movement as if it were a threat. And once fear has you in its grip, every decision becomes a form of self-sabotage. Douglas teaches that fear is ultimately about control. As humans, we want certainty, safety, and predictability. But the market offers none of these things. Prices move in ways we cannot predict. Every moment is unique. When you can't accept this, fear is your natural response, because you are trying to force certainty onto something that is uncertain by nature. The first step toward overcoming fear is to recognize it for what it is, not a sign that something is wrong with the market, but a sign that something needs to change inside you. Douglas urges traders to stop blaming the market and start looking inward. Your fear is not caused by the market. It's caused by your inability to fully accept the risk you're taking. Once you understand this, you begin to see fear as a signal, a reminder that you are resisting reality. This shift is powerful. When you stop fighting the market and start focusing on what you can control, your risk, your process, your behavior, fear loses much of its power. Mark Douglas makes it clear: fear will never completely disappear. But when you recognize its presence and understand its source, you can stop letting it control you. That is the first step toward trading with consistency, confidence, and clarity. Why losses hurt so much? Friends, let's talk about something every trader knows too well: the sting of a losing trade. Mark Douglas says that losses are not just financial setbacks, they are emotional events. And the reason losses hurt so much is that we make them mean something about us, about who we are, our intelligence, even our worth. When you lose money, it's easy to feel like the market is judging you. You think, I was wrong. Or worse, I'm a bad trader. That emotional punch is what makes trading so mentally exhausting. Douglas explains that this pain is deeply rooted in how we've been conditioned to think about being right or wrong. From childhood, we are taught that being wrong is bad. In school, wrong answers are marked with red ink. In life, mistakes are often punished. Over time, we learn to associate being wrong with pain, shame, or embarrassment. So, when you enter the market and your trade goes against you, it doesn't just feel like losing money, it feels like you have failed as a person. This is why many traders struggle to take losses quickly. Accepting a loss feels like admitting you were wrong, and psychologically, that's uncomfortable. So what do most traders do? They delay the pain. They hold the losing trade longer, hoping it will turn around and let them escape without having to face that emotional discomfort. But here's the irony Douglas points out. The more you try to avoid the pain of taking a small loss, the bigger that loss usually becomes. Suddenly, what started as a small paper cut turns into a wound that bleeds your account. And now the emotional pain is much greater than it would have been if you had just taken the loss right away. Douglas emphasizes that losses are not personal attacks. The market doesn't know who you are. It's not punishing you. A losing trade is just information, feedback that tells you what didn't work this time. That's it. The pain only comes from the meaning you attach to it. Imagine a scientist running an experiment. If the experiment doesn't produce the expected result, the scientist doesn't get angry or ashamed. They record the result, adjust their approach, and run the next experiment. That's exactly how professional traders think about losing trades. Douglas says that one of the most liberating mental shifts you can make is to stop taking losses personally. Stop seeing them as proof that you are a bad trader. Instead, see them as a cost of doing business, just like a store owner sees rent or electricity as part of running a shop. When you stop resisting losses, something amazing happens. The fear that once controlled you begins to fade. You no longer hesitate to take the next trade because you're not carrying the emotional baggage of the last one. You stop holding on to losers because you know they are simply part of the process. Douglas also reminds us that losses are necessary for success. They are what allow your winning edge to express itself over a series of trades. Without losses, you would not have probabilities, and without probabilities, you wouldn't have an edge at all. So why do losses hurt so much? Because of the meaning we give them. Change the meaning, and you change your entire trading experience. Losses become neutral. They no longer shake your confidence or trigger emotional spirals. Instead, they simply guide you toward better decision-making next time. The goal isn't to love losing. No one likes to lose. But to accept losses so completely that they no longer control your emotions. That's when you start trading with a clear mind and a steady hand. Accepting the uncertainty. Friends, here's one of the most powerful truths Mark Douglas shares. You can't know what will happen next in the market. No matter how much you analyze, how perfect your setup looks, or how strong the signal seems, the outcome of any single trade is always uncertain. And that's not a flaw in the market. It's just the nature of the game. Douglas says the real challenge for most traders is not that they don't know this, but that they don't accept it at a deep emotional level. They think they accept uncertainty, but deep down, they still hope for certainty. They still expect the market to reward them for doing good analysis or punish them for being wrong. This hidden expectation creates emotional tension every time they place a trade. When you expect the market to behave in a certain way and it doesn't, you feel frustration, disappointment, even anger. And these emotions lead to impulsive decisions, revenge trading, overtrading, or abandoning your plan altogether. Douglas reminds us that trading is a probabilities game. Each trade has a random outcome, but over a series of trades, if you have an edge, the probabilities will work in your favor. Think of it like a casino. The casino doesn't know which player will win or lose any single hand of blackjack, but they know with absolute certainty that over thousands of hands, they will come out ahead because they have a mathematical edge. Your job as a trader is to think like the casino, except that each trade could win or lose regardless of how good it looks. Stop needing to be right on every trade. Instead, focus on consistently executing your edge and letting the law of large numbers work for you. When you fully accept uncertainty, trading becomes much less stressful. You stop feeling the need to control the outcome. You stop obsessing over whether this trade has to work. You just take the setup, manage your risk, and move on. If it wins, great. If it loses, you were prepared for that too. Douglas says that the real freedom in trading comes when you no longer need the market to do anything for you. You stop demanding that it move in your favor and simply respond to whatever it gives you. This mental shift allows you to stay calm even when the market surprises you. Accepting uncertainty also protects you from overconfidence. One of the most dangerous things a trader can do is believe they know for sure what will happen next. That belief often leads to oversizing positions, removing stops, or ignoring risk because you're so certain you're right. And when the market proves you wrong, the result can be devastating. Douglas teaches that true confidence doesn't come from predicting outcomes. It comes from knowing that you can handle whatever happens. You trust yourself to follow your plan, manage risk, and stay disciplined, no matter how the trade ends. That is what allows you to act without fear. So, accepting uncertainty isn't about giving up control. It's about shifting control back to where it belongs, on yourself. You can't control the market, but you can control how you think, how you act, and how you respond. When you embrace this truth, you stop fighting the market and start flowing with it. Each trade becomes just one event in a much bigger series, and that's when you finally achieve consistency, not because you're always right, but because you no longer need to be. Redefining risk, the trader's shield. Friends, Mark Douglas says that one of the biggest breakthroughs you can have as a trader is learning to see risk not as a threat, but as your shield. That might sound strange at first. How can risk protect you? But Douglas explains that clearly defining your risk is what gives you freedom. It's what allows you to trade without fear, hesitation, or emotional chaos. Here's the reality. Most traders think about risk the wrong way. They either ignore it completely and hope the trade works out, or they fear it so much that they can't pull the trigger at all. Both approaches are dangerous. When you ignore risk, you leave yourself vulnerable to catastrophic losses. When you fear risk, you become paralyzed and miss opportunities. Douglas teaches that the solution is to take complete control of risk before you ever enter a trade. That means knowing exactly how much you are willing to lose, in dollars, not just pips or points, and committing to that number emotionally. If you risk $100, then mentally spend that $100 the moment you click buy or sell. Treat it like a business expense that's already been paid. This mental shift changes everything. When you know exactly what's at stake and you've already accepted the worst-case scenario, there's no reason to panic if the trade goes against you. There are no surprises. Your stop loss isn't just a line on the chart, it's a line in your mind that you've already agreed to respect. Douglas also reminds us that defining risk creates consistency. If your position size and risk are all over the place, your emotions will be too. Some trades will feel small and easy to manage, while others will feel terrifying because you have too much on the line. This inconsistency leads to impulsive behavior, closing trades too early, moving stops, or freezing when you should act. But when every trade has a predefined, controlled level of risk, all trades feel the same emotionally. Win or lose, you know exactly what it means for your account. That emotional stability is what allows you to follow your plan without hesitation. Douglas even goes a step further and says that risk should be embraced, not avoided. Risk is what creates the possibility of reward. Without risk, there would be no profits. So instead of fearing it, treat risk as the cost of doing business. Just like a shopkeeper pays rent every month, whether customers come in or not, you pay risk every time you enter a trade, and sometimes that cost results in a loss. That's normal. By redefining risk, you stop trying to control the market and start controlling yourself. You no longer need to be right on every trade because you know that any single loss will not destroy you. You can take the next trade with the same calm mindset, allowing your edge to play out over time. Douglas calls this state psychological freedom. When risk is predefined, you are free to act without hesitation. Free to let profits run without fear of giving them back. Free to take losses quickly because they no longer feel threatening. This is why risk management isn't just about protecting your account. It's about protecting your mind. When you master risk, you master yourself. And when you master yourself, you put yourself in the rare group of traders who can trade with true discipline and consistency. The paradox of fear. Friends, Mark Douglas points out something fascinating about fear. It doesn't just hold you back, it actually causes you to create the very outcome you are trying to avoid. This is what he calls the paradox of fear. You're afraid of losing, so you hesitate, you overthink, you second-guess yourself. And those very actions lead you to lose even more. Let's break it down. When you're afraid to lose, you tend to hesitate on good trade setups. You wait for more confirmation, hoping to avoid being wrong. But by the time you finally enter, the move is almost over. You end up getting stopped out on a retracement or taking a much smaller profit than you could have had. The fear of losing made you trade late, which ironically increased your chance of losing. Fear also makes traders cut winners short. The moment a trade goes into profit, fear whispers, "Take it now before it turns against you." So you close out too soon, leaving money on the table. Later, you watch the market keep moving in your original direction, and frustration takes over. This emotional frustration then drives you to jump into the next trade impulsively, often without proper analysis. And that trade usually ends up being a loser. Even worse, fear convinces you to hold on to losing trades much longer than you should. Why? Because taking a loss feels like admitting you were wrong, and fear wants to protect your ego from that pain. So you hang on, hoping the market will reverse. Sometimes you even add to the losing trade, thinking you're averaging down. But more often than not, the loss grows bigger, eventually hitting a level that feels unbearable. At that point, you panic and exit, locking in a much larger loss than if you had just respected your stop in the first place. This is the cruel trick fear plays on traders. It flips logic upside down. Instead of doing what professional traders do, cutting losers quickly and letting winners run, fear makes you cut winners quickly and let losers run. Douglas emphasizes that this behavior is not because traders are reckless or foolish, but because they are trying to avoid emotional pain. The mind is wired to protect us from discomfort, so fear feels like a warning signal. But in trading, this warning often leads to destructive behavior. The solution, Douglas says, is not to try to eliminate fear, but to change your relationship with it. Fear will always exist in some form because trading involves uncertainty and risk. The key is to stop letting fear control your decisions. How do you do that? By predefining your risk and committing to follow your rules no matter what. When you know exactly how much you stand to lose and you have truly accepted it, fear has no leverage over you. You can take the trade without hesitation, manage it according to plan, and exit when your stop or target is hit, without second-guessing yourself. Douglas also reminds us that when you stop fighting fear, you gain clarity. You start seeing the market objectively instead of through the lens of your emotional reactions. This objectivity is what allows you to act in alignment with your edge rather than sabotaging yourself. The paradox of fear is powerful. It shows that fear is not just an obstacle, it's a trap. But once you see it clearly and learn to manage it, you break free. Instead of fear driving your actions, discipline takes over. And that's when you start trading like a professional. The trader's mindset, acting without fear. Friends, Mark Douglas tells us that the ultimate goal of every trader should be to act without fear. Not because the market is safe, it never is, but because fear destroys clarity, distorts judgment, and keeps you from executing your plan consistently. The professional trader learns to operate from a place of calm confidence, where decisions are made not from emotion, but from discipline. But here's the important truth. Acting without fear does not mean you never feel it. Fear will always exist in the background because trading involves uncertainty. The difference is that professional traders have trained themselves to act in spite of it, without letting it influence their choices. Douglas explains that this mindset begins with one shift. Stop trying to predict outcomes and instead focus on executing your edge. Amateurs think their job is to be right, to predict where the market will go. Professionals know their job is to follow their plan faithfully, trade after trade, knowing that the probabilities will take care of the rest. When you stop needing to be right, fear loses its power. Think about it. Fear comes from imagining all the things that could go wrong. What if I lose? What if I'm wrong again? What if this trade ruins my account? These thoughts arise only when you're attached to the outcome of one individual trade. But when you see each trade as just one of many in a series, the pressure disappears. Douglas says that true confidence in trading does not come from believing you will win, but from knowing you can handle any outcome, win or lose. That means having complete trust in your rules, your money management, and your ability to execute without hesitation. This trust becomes your anchor. Another element of the trader's mindset is consistency. Acting without fear is not about taking bold, reckless risks. It's about doing the same thing over and over with discipline. Douglas often compares it to being a casino. A casino doesn't care about individual results. They don't celebrate when a player loses or panic when someone wins big. They simply keep running the same game, knowing the house edge will play out in the long run. That's exactly how you must approach your trading edge. But let's be real, it's not easy. Fear will tempt you constantly. It will whisper that you should move your stop just this once. It will tell you to skip a setup because the last trade was a loser. It will push you to take profits too soon, convincing you that the market is about to reverse. Acting without fear means recognizing these mental traps and refusing to let them dictate your actions. Douglas emphasizes that this level of mental discipline comes only with practice. You can't just tell yourself, "I won't be afraid." You have to train your mind by consistently predefining risk, executing trades according to plan, and experiencing firsthand that losses are not threatening when they are controlled. Over time, this builds trust in yourself, and trust is the foundation of fearless trading. When you finally reach this mindset, something magical happens. Trading becomes less about winning or losing and more about playing the game correctly. You start to enjoy the process itself, identifying setups, managing trades, recording results, without being crushed by every losing trade or overly excited by every win. You stay balanced, steady, and calm. This is what Mark Douglas means when he says a trader must learn to act without fear. It's not about eliminating emotion altogether. It's about not letting emotion interfere with execution. That's what separates the amateur who reacts to the market from the professional who responds to it with discipline and clarity. Freedom through discipline. Friends, this is where everything comes together. Mark Douglas tells us that the ultimate goal of trading isn't just making money, it's achieving freedom through discipline. Discipline is not about restriction or rigidity. It's not about blindly following rules without understanding them. Discipline is the mental framework that allows you to act consistently, objectively, and without fear, no matter what the market does. Think about the traders who panic at every move. They overtrade, they hold losers too long, they cut winners short, and they react emotionally to every price swing. Douglas calls this trading under the tyranny of fear. They are never free because their emotions always dictate their actions. Discipline is what breaks that tyranny. Douglas explains that discipline begins with a commitment to your plan. Every trade must have defined entry, exit, and risk parameters. Every decision must follow your rules, regardless of how uncertain or uncomfortable it feels in the moment. This commitment is what creates consistency, and consistency is the foundation of freedom in trading. Here's the paradox. Douglas highlights: the more disciplined you are, the freer you become. When you follow your plan with precision, fear loses its grip. You no longer worry about individual outcomes because you know that over time your system will yield results. You stop being emotionally attached to any single trade. That detachment is not indifference. It's clarity. It's a calm confidence that comes from knowing you are always in control of your actions, even when the market is unpredictable. Douglas also reminds us that freedom through discipline extends beyond the charts. It changes how you experience trading and life. You're no longer chained to the screen, paralyzed by indecision, or driven by emotional swings. Instead, you make decisions with calm focus, accepting uncertainty as a natural part of the game. This mindset allows you to enjoy the process, learn from each trade, and continuously improve without being punished by your own emotions. Another key insight is that discipline protects not just your capital, but your confidence. When you know you can follow your plan under any conditions, you gain a profound sense of self-trust. This trust is essential because it allows you to recover from losses quickly, to stay patient for the right setups, and to maintain objectivity even during market chaos. Without discipline, confidence is fragile, easily shattered by a string of losing trades or unexpected market moves. Douglas emphasizes that freedom through discipline is a journey, not a destination. You won't achieve perfection overnight, but every disciplined trade strengthens your mindset. Every time you act according to your rules, despite fear, hesitation, or uncertainty, you reinforce the neural patterns that make disciplined action automatic. Over time, this becomes your natural state, calm, confident, and emotionally resilient. Douglas reminds us that disciplined trading transforms your relationship with the market. You stop seeing the market as an adversary and start seeing it as a partner in your process. The market becomes a neutral field of opportunity where probabilities unfold. Losses become lessons, wins become confirmations of your edge, and you, as the disciplined trader, remain unshaken, ready for the next opportunity. Freedom through discipline is the ultimate payoff of Mark Douglas's teachings. It's the mental and emotional mastery that allows you to trade consistently, confidently, and profitably. Discipline liberates you from fear, from impulsive reactions, and from self-sabotage. And when that happens, you are no longer at the mercy of the market. You are the master of yourself. If you found this video helpful, make sure to like, share, and subscribe, and hit the bell icon so you never miss a lesson that can improve your trading mindset. Comment below and tell me, what's your biggest fear in trading? And how do you deal with it? I'd love to hear your thoughts. Stay disciplined, stay confident, and I'll see you in the next video.